powered by Reviting, streaming from the Reviting Digital Studio. It's the David Daily. Exploring frontier technology, artificial intelligence, quantum innovation, and the intersection of faith, funding, and the future. Here's your host, David Goki.
Welcome to a brand new episode of the David Daily, and today we have a very special guest. It couldn't have been at a more timely time than this. In fact, she comes with massive experience, not only taking public companies public, which they become public after, of course, they are public, but also massive experience with AI, with also the energy sector and renewables, and also technology, bringing companies from California to Texas. And I'm so excited, incredibly excited to have a guest today. So if you're tuning in for the first time, please let us know where you're tuning in. This is a live stream. If you're catching this live, we'd love to hear you being active in the audience. And also for those of you who are watching this later, please subscribe so that you can see more of our special guests here on funding, faith, and future. So let's go ahead and play that funding intro video, and then we'll get Andrejka Bernatova on the stage.
Time to talk about funding.
All right, Andrejka, welcome to the stage. So thankful to have you on the live stream today.
Hi, David. Great to be here.
Yes, you're excited. You've got your Beyond the Bag item, which, by the way, if you're tuning in for the first time, she's got a special Beyond the Bag item. I cannot wait. So just tell us a little bit more, Andrejka, a little bit about yourself, and how did you actually get here to being the CEO and chairman of a publicly traded NASDAQ company, and why does energy really matter to you?
Yes, so thank you for having me again, David. Super excited to be here. I'm originally from the Czech Republic, actually. Came to the US about 30 years ago, almost 29 years ago, believe it or not. But I spent really the last 20 years or 20 plus years of my career in the energy and infrastructure spaces. And I'm a founder, I guess, chairman and CEO of Dynamix Corporation 3 now, which is a publicly traded company. We are focused on merging with other companies in the energy and infrastructure and natural resources spaces. My background is I was a banker at Credit Suisse and Morgan Stanley. I was also an investor at Blackstone in New York and at a sovereign wealth fund called Mubadala. I was based in Abu Dhabi. And I was also a founder and operator of a number of businesses, and again, the energy and infrastructure spaces, and have taken one company public via an IPO as an operator and prepared a number of others to go public. So, really, really exciting journey. And about 5 years ago, founded what's now the Dynamix platform. And Dynamix Corporation 3 is part of their platform. So excited to be here. And, there is a lot to do in order to help grow the AI space, and especially from the energy perspective, because, energy and power is really at the center piece or center point right now of the growth of AI and enabling the growth of AI.
Mm-hmm. Yeah, no, I totally couldn't agree more with you. And we're going to talk about our third topic. So for you joining today, we have three main topics today. And the first is operational support for energy and deep tech founders. So in the context of funding, you've been an investor yourself. You're also ex-founder and also current founder. You're also the chairman as well, who's taken a company public. So what does funding mean for someone at your stage, and how do you offer operational support for energy and deep tech founders today?
Yeah, I think that I really love that you guys are focused on the operational support. I think that in some instances, I think the investors went away from being the sort of conduit between investment and helping execution of companies and projects, and so we're very focused on collaborating with the companies that we invest in or we merge with to help them, one, with, for example, commercial contracts. So in our space, and if you think about, for example, the AI space was a really critical piece in order to build any kind of energy or large scale infrastructure is the commercial contracts that are in place that then will unlock the funding journey, right? Be it both from the equity side as well as the debt side. And so the critical piece, the commercial contracts with hyperscalers, with data center providers, with logistics providers, is the sort of the commercial contract. The second piece I would say is just execution itself. The help with permitting, help with the sort of the picks and shovels with actually operating, building the facilities, and then at the end of the day is, like I said earlier, is the help with the capital structure, because what we are seeing, again, with the large scale facilities that need to be built, it's not a simple structure. It is not just, it's not VCs, it's not just private equity, it's not just infrastructure funds, it's not just debt, it's most likely all of the above and, other pieces of the capital structure. So it's a fairly complex exercise, and the operational piece and being involved with founders, being involved, deeply with projects based on our, 2+ decades of experience in energy infrastructure is a critical piece in order to enable the sort of a next stage of infrastructure growth for AI.
Yeah, I love that. There's so many places we could take this. But what I'm hearing you say is commercial contracts and operational efficiency across all of the different funding layers are really important. And so you've recently taken Dynamix 3 public, even the past 2 years. So what operational alignment and efficiency did you need to achieve as an organization, not only to please your shareholders and stakeholders, but also your customers and partners?
Yeah, so our company, so we are a sort of a fresh company that's been taken public in October on Halloween Day, actually.
Congratulations.
And we're now looking to, thank you. So we're now looking to merge with other operating businesses, David. So we are looking to merge with businesses in the energy space, infrastructure space, natural resources space, manufacturing spaces, for example. And so right now we don't have an operation for Dynamix 3. But once we do merge with another company, then we would be looking to really help them, one, with audits, because as part of the merger, the important piece is you have to have a sort of public company compliant audit. We would help with SOX compliance and everything that needs to be done vis-a-vis legal and processes as a sort of a back office support. And then we would help on the commercial side. So we have a number of folks that are involved with us that are investors and advisors that come from hyperscalers. And so to the extent that we merge with let's say an energy business, then we will go and see if we can source commercial deals and help structure those commercial deals with our company as well.
I was just thinking about the commercial deal structure as I was reading your bio here on LinkedIn, leading the charge in reliable energy solutions. And one of the goals of this live stream is to find potential operational mergers. So tell us a little bit more about the type of structure you typically look, maybe from more of a finance and funding perspective, right? When you're looking at, say, all right, let's have a company that we can merge with so we can add more value. What are the characteristics or qualities of a company that you're looking for?
So number one, it needs to be a business that's in the right industry, where we feel that we have expertise and where we can actually add value to the company along the way, as we just talked about, David. Number two is it needs to be a business that's sort of a later stage. So we don't look at startup businesses. We generally come in at a post VC stage and sometimes actually a post private equity stage when the business has sort of the potential to be a multi-billion-dollar scalability in a fairly short order. So majority of the companies we look at are, from a valuation perspective, $1 billion+ businesses. So it's a little bit later stage, and you're basically at the stage where you started your business, you've grown your business, you have some of your first customers, and then you're sort of reaching a hyper growth. And the reason for you to go public, really, and that's one of the sort of components we're looking for as well, is I need the scalability. So I need to raise immense amount of capital, which is generally only possible in the public market, again, to build your power facilities or energy facilities or or produce any kind of energy, whether it's solar or wind or others. And so it's really reaching a stage where I no longer have availability in the private market because I'm growing so big. I will actually need to issue billions of dollars of equity. I will need to layer in billions of dollars of debt. So it's generally later stage companies that are reaching sort of exponential growth.
Yeah, I love that. We're living in the age where Nvidia is making $1 billion acquisition every week, and we now have companies valued at, multiple trillions. So it'd be interesting to see how the markets expand and create free flowing capital. So since you're in energy, and that's really relevant today, we're seeing a lot of fluctuation in the energy market. To keep this maybe future proof, how do you advise energy companies, especially those that are already public, in a time when economics are maybe more unstable or unpredictable rather than maybe times when they're maybe more predictable? What would you be telling energy technology businesses today who are focusing on that uncertainty?
Yeah, that's a great question, David. And coming both from oil and gas as well as renewables, basically, if you've been in energy generation or transportation for a while, you realize there's always uncertainty. And I always sort of get entertained when there are industries who are sort of like, oh, prices went up or down 5%, and they all sort of freak out. And I'm like, well, we live this on a daily basis, right? If you want to function in anything that's related in energy, you have to get ready for a sort of a stressful ride, I would say, or exciting ride. What I would say, though, David, to sort of what would be the suggestion to folks that are are in the energy and energy technology space, you always have to build so let me rephrase this actually. I come from a communist country, and I know what the word subsidies means, and I know what subsidies are not generally useful for. You can't rely on sort of constant support from other source than sort of capitalistic market, if you will. So number one advice would be, if you have a product or infrastructure that is reliant on any sort of subsidy or any sort of external support, that's probably not a viable long-term business model. And the reality is, we are even if you think about oil and gas versus or fossil fuels versus renewables, you're obviously seeing extreme shifts, right? One direction or another. And so being a business that's able to sort of think through, hey, what's going to happen, in 3 years, what could happen in 3 years, and then what could happen in 4 years after that, always building for no matter what happens with the political regimes or with geopolitics. I have a high likelihood to succeed because my product, and this is a critical piece, my product or my infrastructure is mission critical. It's something that my customers cannot live without. So that would be probably my number one advice, David, for founders in the energy space. Just always think about, is this something that somebody, a slice of customers is not going to be able to survive without?
Yeah, I love that, especially when you're like a core need for industry. I was reading an article the other day and listening to some commentators saying, like, of the top 10 Fortune 100 companies, Fortune 10, I think 7 or 8 was an energy related industry. And the first 6 companies depend on that energy. For example, big tech, right? And I have a big tech background. I was in Microsoft for 10 years, helped scale Azure. And one of our biggest bottlenecks, to your exact point, was real estate, legal, and power, right? So we need the land, we need the legal oversight in country, on the ground, internationally, of course, at the largest scale, Microsoft. But also, to your point, where is our energy going to come from? So when you think about deep tech and deep tech founders, what is your position on quantum energy and nuclear coming in as new emerging technologies potentially that can help supplement those costs and dependencies on traditional oil and gas? And of course, you mentioned sustainable energy as well. But what's your perspective on nuclear, modular nuclear, and deep tech taking advantage of some of these new technologies coming out?
That's a great question. Thank you for asking that. I mean,
You're welcome.
I've lived on both sides, sort of on the renewable side and natural resources side. So we're indifferent. We sort of think about energy as one energy. And I think at the end of the day, the power need, to your earlier point, is just so immense that we'll need essentially all the tools at our disposal. Now, I would say, though, obviously there's a lot of exciting sort of stories or thesis or contracts or interest or, all of the above in terms of nuclear or geothermal and, other hydrogen, for example, is another one. Carbon capture is another technology that are sort of I would say the potential future solutions. What I would say is what's interesting that you're seeing in the space right now, in the AI space and deep tech space, is that, the dire need for power and energy is today. And so from our perspective, we generally like to focus on solutions that are going to be sort of activated and are going to solve the bottlenecks of energy and power in the next 5 years when it's truly critical. And that means from energy availability as well as resiliency, right? Which is an important component as well. And we can chat about that later. But so I think what's really critical is in the short term availability of energy and power, and then all these solutions like nuclear and geothermal and carbon capture, hydrogen, and others, I think are going to be a interesting addition sort of to the energy table, but they are not actionable solutions at scale today, which is really what's needed.
Right. I really like that. And even in the oil and gas and energy sector, saying 5 years being like that short to medium term, that's a great way to think about it, because in the next 5 years, I personally believe, and I'll just go out there and make this massive kind of projection or future claim, is that I think that technology is going to be completely different than we've seen it today. And it's going to be much more deeply integrated into biotech and infrastructure, meaning like the land that we walk on. We'll be using energy more efficiently as well. So, all right, we've got so many topics. It's so exciting to have you here, Andrejka. What a pleasure. I've got 2 more quick questions as you're thinking about late stage scaling after venture capital into IPO stage. So, what hiring decisions lead to the highest leverage? Like, a lot of people come on this show, they say team, management, people, culture, those are really the key ingredients to growing a business. And it's, you hear that age old mantra of, do I take an A class team with a B class product or service, or vice versa? Why not both? Why not an A class team with an A class product service? So what is that highest leverage point for finding the right management team?
Yeah, I really like how you sort of framed it, David. So team is obviously everything, and it has a number of components. Number one is, this is sort of maybe more of a personal rule, but surrounding yourself by good people who have the right moral compass, who you can trust, who are fired up. You don't have to call them, hey, did you do this, and check on them 5 times whether they did something, and they're really kind of believing in your common mission. And honestly, like in our case, obviously it may not be as futuristic as solving some big problems in 10 or 20 years. It's really more, hey, can you get things done? Things need to be done. Energy needs to be created, or got out of the ground.
Get stuff done.
Yes. So you kind of have to be passionate about, hey, I just want to provide gas infrastructure to Microsoft, and that has to be exciting for you. And so but I think that moral compass, that excitement, and and honestly trust, maybe it's because I come from Eastern Europe, and it's something that's very natural to us. You don't need contracts. It's just something, on our team, we're all partners. We have an amazing team. And having I would say the core team, David, that you can trust, and then sort of branch out, right? And so that's number one. I would say in terms of what comes first, whether it's the team or the product, if you will, I would say it sort of goes hand in hand, right? So it's, at the end of the day, it's about execution from our perspective. And you have to be aligned on sort of, I think a lot of the times, it's funny, I was just talking to my son about this, vis-a-vis sports, and I said a lot of times people don't have a goal. It doesn't matter what your goal is, whether you want to go to the Olympics, or whether you want to go to the NHL, or whether you want to build a $10 billion business, but sort of sitting down with your team and saying, this is our end goal. Now, we may not exactly reach that. It's going to be likely very different, right? But at least I can work backwards and I can think through what are the milestones that I need to fulfill up, to this date in order to get to that, whatever, $10 billion business, let's say, in this example. So a lot of the times what we see, and we speak to hundreds of companies, David, and one thing that surprises me a lot of the times is that companies are sort of, throwing spaghetti on the wall and hoping it sticks. And it sort of changes every day, right? Like today I want to do this and tomorrow I want to do that. It's amazing how many founders are sort of heading in a different direction on a daily basis almost. So you have a common goal, you have a mission, you have high conviction around it, right? You and the team. And then you just sort of work backwards and you're like, okay, I'm going to give myself this amount of time. It seems very simple. It's like doing a homework for, in fifth grade, right? It's not that complex, but it shocks me how many times people don't have a goal, they don't have a plan, and they don't have conviction, and they change their mind on a daily basis. And, and that confuses, right, your team, and that confuses the entire company a lot of the times. It's
I love that. Conviction. I'm hearing you say that conviction is the highest leverage point for hiring decisions. I love that. Let's actually move into our faith topic now.
Focusing on faith for a moment.
So faith, values, welcome to Funding, Faith, and Future. We're here with Andrejka Bernatova, a publicly traded CEO and chairman here on the David Daily. Thank you for tuning in now and later. Really appreciate that. We're really talking about late stage scaling after venture capital as you go into IPO. And the topic now is faith and what aspect faith, morals, ethics play into the convictions that you have on your team. So I really want to lean into that. And also, we're going to get into our second topic here shortly. But coming from a communist country, Czech Republic, also we see global tensions in Europe and all over the place today. In the future, we may see more conflict, we may not, right? But whether we see conflict or not, we know that religion and faith play a very important role. Now, on this show, we take more of a pluralistic view on that, meaning we care about all of the world's religions coming together to produce more ethically, morally sound technology. And that's why I'm part of AI and Faith, which has that core mission as a nonprofit. So from your perspective, surrounding yourself with a core team, I definitely agree with you on that. Many people watching this will agree. How long or at what point do you know, like, this is a person or a set of people, Andrejka, who have the same convictions, the same gusto that I do? I mean, you're wearing a lavender shirt. I have like a pink, or a little purple, like, pocket square. Maybe that's the conviction. Like, we have the same conviction on color. But how do you know when you don't have the same conviction, and how do you make those types of decisions quickly? So really twofold, like, how do you really identify the deep convictions and how long does that take? And then when those convictions don't really line up, at what point do you really cut the cord and say, look, this is no longer beneficial for our private business or our future business? Like, you need to go, I need to move forward. The team will be stronger with or without you. How do you as a leader make some of those conviction related decisions?
So your first question, I would say, David, my answer is not necessarily time related, whether it's 2 minutes or whether it's 2 years. It's really what you go through as a sort of a experience versus a passage of time, right? So going actually through some tough times, with individuals on your team, as a team together, is really what sort of truly tests, I think, the trust level and the morals. And, and again, I say this to my kids, and we say this in our company, no matter what you do, I mean, it's from the small decisions to the, extremely impactful decisions that are, that can cost you and your investors, billions of dollars. You just always have to do what's the right thing to do. So when we get together as a team, we always, I know it's like very simple, and maybe that's something that you read in, books in the first grade or whatever, but it really comes down to, like, any decisions we make, sometimes it's tempting to go one direction and because it's easier or whatever, more beneficial. but we always go back to, is this really the right thing to do? And so,
Right.
the testament, hopefully, we always try to surround ourselves not only by the right team, but also, for example, investors. There were instances when folks wanted to invest with us, and it just, we didn't have the same sort of mindset, I would say. And so it's everybody. It's everyone from your team to your investors to your obviously your board to your customers. Making sure that everybody has sort of the same sort of framework, I would say, from a
Yeah.
moral perspective. So again, that's not time frame. It's
Right.
more sort of what you go through.
Yeah.
Second question, how do you deal with situations where it doesn't work? I mean, this is not going to sound great maybe, but you can test people and they can go through number of situations. You put them in situations of will they kind of do the right things. If you see people not being on the same page, I think you need to cut the relationship immediately. And I do this in my personal life. I do it even with my kids. If there's somebody that is not behaving well, you just need to have them live their lives and you live your life. But it's critical. I think this is I do this very consciously now. I sort of did it unconsciously when I was younger, but I now realize that I did it consciously. Is I really manicure sort of the people that I sort of put around me in my professional life and in my personal life. And if you are not on the same wavelength, if we don't have the same moral compass, and we can have completely different views. We can have different religion. We can have fundamentally very different political views or any other views. But, there's this sort of core value set where it's uncompromisable. I just sort of, exclude people from my life if they don't have the same sort of set.
Yeah, no, that resonates deeply with me. I like these sound bites, by the way, Andrejka. I really love it. And I think you probably have the highest KPI of most times you've said my name. So we can just maybe keep Andrejka on stage for a second. So yeah, I was just going to say, it is beautiful to hear your little sound bites. Basically, did you read books as a first grader? And are you smarter than a fifth grader? Come on, dummies. This is not rocket science. 2 minutes or 2 years, that's the spectrum we're on right now. And I really love that, because when you're seeing this later and you're saying how did I make that wrong decision? Well, you went longer than 2 minutes when your gut said, yeah, cut this person and move forward. Love that. So building on that, what mistakes from growth stage showed up later? What's one mistake that you can think about that showed up later during growth stage that really affected you? So, maybe after that 2 minutes, I could have cut that person, or maybe 2 months, or maybe even 2 years, and still we had this dead weight. Maybe this is your Eastern European side. I'm half German and half Korean, so I know how to cut the cord and cut it quickly. And there's a grace about doing that, right? But what mistake can you think of, either from your own personal experience or others, that led to, a mistake during that growth stage?
I think one mistake, and again, this is going to sound a little sort of fluffy. I'm not necessarily sort of a, fluffy person, but I think trusting your gut. And when something is a little off, whether it's in a with the employee that you're like, well, at the interview there was something that didn't kind of feel right, and I couldn't point to it. There wasn't anything specific, but it just kind of didn't feel right. Or a customer, they're like, I knew that they're gonna be tough, and I wanted to give it a chance. And I would say, again, maybe a soundbite, David, would be, hoping and giving something a chance. I just don't think that's a strategy. That's a very, strategy that you can rely on. At the end of the day, if you have a gut feeling that something is off and you try to, kind of give it some hope, it generally probably doesn't work. So I would say if something is off, sort of eject, go in a different direction, and don't try that you will, you can hope to change something. I mean,
Right.
It's just for relationships, right? You may be dating a girl or dating a guy, and you're like, oh, if I just change this one thing, they'll be totally different. Well, it's very hard to change people, right? And so living on a hope is not generally what I think is a viable strategy.
Yeah, I love that. Sound bites are she's not fluffy and cut quickly. I really like that. So we're going to get into our second topic. We have an expert here in the energy space and public IPOs and all things bringing commercial deals together, the energy sector as well, and deep tech. So when you're thinking about investing, how do you drive energy investments specifically focused on tech infrastructure and expansion of AI?
So number one, we look at, you mentioned actually, David, that land is so important, right? And power is important. And so in our case, it's all about execution. So is this, number one, do they have a project or do they have a product that's actually, highly scalable? And this is going to sound very basic, but is this a product or infrastructure that's actually going to be profitable, or is already profitable? But I want to hone in on this topic because the profitability topic, you're seeing a lot of sort of projects and ideas and people who are like, okay, I have something that, in 5 years, it's going to be functioning. And in 10 years, it may or may not make revenues. And in, 2 decades, it can actually create cash. And I always go back, to like, my dad is a car mechanic and he knows he has to collect more money at the end of the month than he is actually spending, right? I mean, that's kind of, let's go to the basics of economics, not some fancy Harvard Business School stuff, but basics of economics. Do I have something that at some point in the near future can actually create cash returns for investors? So that's
cash returns for investors. I love that. And keeping it simple. If your unit economics don't work, most likely your scale economics won't work, right? So
yes.
Speaking about economics, what power economics most determine AI data center and infrastructure profitability?
It's number one, it's a long-term contract, because if you have a long-term contract, you can sort of stack your capital structure with late stage private equity, infrastructure funds, public equity, and all sorts of debt, right? And debt is really important. It's sort of like when you go buy a house, you're not going to buy it with equity. Generally, it doesn't make economic sense to do that generally. And so the same thing happens to a large scale power project. So having a long-term contract. The second piece.
Sorry, when you say long-term, are we talking 5 years, 10, 20? I know you mentioned 5 years is kind of that golden.
15 to 20 years is
15
really
to 20 years energy contracts. So these commercial contracts are long-term. We're doing business for not just 1 decade, but 2 decades. And how do you structure those profitably? So, like, okay, in year 5, we're going to do this. Like, what milestones do you set up typically in that long-term commercial contract?
So for projects, David, you basically look at, what is the power need of that facility, let's say, and how much is going to cost me to produce that power, right? And so those are super complex projects. That's one of the things that I think that folks don't realize. Real estate, for example, you buy a piece of land, pretty straightforward. It can go up and down, can be developed or sort of stay idle. For power infrastructure, you have to produce or extract energy, then you have to transport it, then you have to, build a power facility, and then you have to distribute it, and you have to have a resiliency component, because if your power facility is not functioning, you have to have a backup power. So I mean, these are tens of billions and hundreds of billions of infrastructure, and it doesn't happen overnight, right? So it's really a multi-year projects. And so the way, when you ask, how do you determine it's going to make money? I mean, it's a whole bunch of engineers, that determine, hey, how much is going to cost me to produce power? And, based on that, I'm going to strike that contract. So you, again, work backwards, right? This is how much it's going to cost me. This is how much I'm going to have to return to customers. Therefore, this is what the contract is going to look like.
Yeah. Thank you for that. So I'm curious, like, what are some of those hidden costs or maybe even public costs in energy that affect margin?
The input costs, right? So that's number one, whether it's, gas, or whether it's solar, whether it's wind. So that's number one. I would say number two, and that's a very relevant topic for, hyperscalers, is the sort of decarbonization component is an important one. And so to
Right.
the extent that you have a fossil fuel, provider, which likely is going to be the case, it's just
Right.
there's no other way around it. Some of
Right.
the hidden costs could be sort of the carbon capture, the decarbonization facilities. Then you will then have to build that really are
Right.
not proven, right? They haven't been done at scale.
Right.
So those are sort of the hidden costs of at some point down the road. If
Yeah.
you want to,
Sustainability, right? And eco-friendly. And nowadays, every entrepreneur and investor wants to have some sort of social cause. Energy is not exactly necessarily in that type of culture. It's kind of like we need the energy and we need it now. And so I'm kind of curious, right? So if there's long-term potential power pricing risk or energy pricing risk, how do investors model that into long-term contracts? I mean, today we're seeing energy fluctuate like by 20, 30% in some cases. That has a real consumer effect. And then it impacts obviously like logistics and transportation. You need these trucks to be driving all this energy, this crude, right? All this raw material. And of course, it takes power and energy to distribute that and store it and refine it and all those things, right? So, how should investors model long-term power pricing risk?
I mean, there are components of it that are passed through. So you can pass some of those components,
Hmm.
David, onto, your Meta and your Google, etc. The second piece is, again, it goes back to the basics in terms of, having mission critical infrastructure. And so if you have
Right,
a strong counterparty and they do need that infrastructure, then, they will work with you right along the way to the extent that there are
right,
serious sort of deviations. I would say the other piece is also it's not only about power cost, but it's also resiliency. So making sure
right,
that you have, because sometimes you contractually are obliged to provide power to customers, and so making sure you have number of facilities that you can tap into. If one of them goes down, the
right,
other can actually perform. So those would be probably the components but again, the mission critical infrastructure, actually, David, is the biggest one. Now, the second one, I would say,
right,
we see this quite a bit. And we see it especially in early stage companies, but even in some of the later stage companies and projects, is customer concentration. So sometimes,
mm,
founders
right,
think, or projects think, oh, okay, I have a XYZ very large customer and it's great. And, they are AAA rated and it's going to be all
right,
amazing. Right. So, I mean, I'm exaggerating here, but really it's the over concentration to a customer
right,
is a real issue. And so
right,
making sure that you don't sort of go the easy route, because sometimes the customers want to take all of your capacity and
right,
get all of your power. Make sure that you are always, like very diversified. Two
right,
customers is also not diversification. Make
right,
100% have the small customers, have the large customers, right? And sometimes the other piece that I would say is sometimes having a smaller contract with a number of big customers is actually a better option versus
right,
having a mega contract. Just think about, Shell had this mega contract on the
right,
wind side, and just thinking about it from a customer perspective. So if I have an ultra large customer who has very large contract exposure to me and something doesn't go right, they
right,
can renegotiate the contract and terminate the contract, get out of it for, a de minimis amount to them. So always
right,
thinking, I'd rather have a smaller contract with more customers, because for a large customer to terminate a small contract, they don't need
right,
that, right? It's not big exposure. So
right.
that's one trend that's actually, I think it's interesting, and it can lead in although more painful potentially, because you have to get many more customers, it may lead to a much more stable business.
Yeah, no, I love that perspective. And we saw this as well before I went to Microsoft full time. I was in a small consulting firm, and 95% of our business was Microsoft. In fact, we became a Microsoft shop. And the problem with that is that when we went to liquidate the business and become an acquisition target, the diversification was not there, and the relationships were so deeply embedded into one very large customer. Now, yeah, $1 trillion company will have billions of dollars in its wake up for grabs. But I really like that perspective. I think the big soundbite for me, Andrejka, is that have a couple of small contracts with big companies so you can prove your value. Long-term contracts, so yes, of course, but then as you prove that value, you can really land and expand. And I'm hearing you say that that's one way to diversify risk, especially in energy investments.
100%. Yes, 100%.
I love that. All right, well, we're going to get into our third topic category of future. Let's play that intro reel and we'll get right into it.
Let's talk about quantum and the future of technology.
Okay, this segment is brought to you by Reviting. We're so thankful for our producers behind the scenes. With just 4 hours a month, we're able to go live on the David Daily Show, bringing special guests like Andrejka here, a publicly traded CEO and chairman. Miss, it is so good to have you here. Let's get into this third topic of energy and digital infrastructure for SPAC fundamentals. First of all, let's just define SPAC so those who are watching know, and for those experts. And then what's required to have a successful SPAC? You've done it yourself.
So SPACs, it is a special purpose acquisition company, and essentially those are what we would call blank check companies that go public, and their role is essentially to acquire another operating business, one or sometimes couple of businesses. Now the SPAC product, has been a sort of a 4-letter word quite a bit in the recent past, and the reason, in my opinion, is the way I think about SPAC is the same way I think about leverage. So if you use the product in a wrong way, it can really sort of tank the business, if you will. It can really destroy your business. But if you use it in the right way, it can supercharge your business, right? It's a part of capital structure that can take you to the next level. And so the unfortunate thing about SPACs has been in the recent past is that they have been widely misused, right? In the 2021, 2022 timeframes, it was really used what I would call, you're going to like this, David, get ready. They were used for first grade, second grade business projects, ideas, right? Somebody had an idea. Okay, I'm going to have this product in 5 years, and this is going to be the TAM, the market size, and we're all so excited about it. It's going to change the world, and you really don't have no substance behind it, right? You don't have a product, you don't have revenues, you don't have a team, you just got a seed funding, and now you think you're valued at $1 billion. And so that was really I would say, is the pitfall of that product in the kind of 2020, 2023 timeframe. I think, again, we like SPACs. That's why we do SPACs. We actually think that they have a much more prominent role, David, now versus IPOs, because and we talked about it a little bit earlier, what's happening now is the sort of sentiment is changing very quickly, right? And it's not just during this administration, it's been the case for a while now because of really the impact of, social media and all the information that's coming our way. And so, traditionally IPOs were really the sort of the cornerstone of taking companies public, because you would, investors would analyze, they would have time, sentiment wouldn't change so quickly, and then at the end of your 12 or 18 months, then you would go public via an IPO. In a SPAC format, you can really hit the market in a rapid speed, which you cannot do in an IPO. So when the sentiment is there, for example, right now, oil and gas prices are high. People are realizing we need oil and gas. We can't get rid of it as much as we would want to. It is an increment. It's a really important piece of our life. Everything we touch is actually made from petrochemicals. So whether we like it or not, we kind of are realizing we need it. And so prices are up. This could be a very interesting time for oil and gas companies that are scalable, that want to hit the market. In 2 months it could be very different, right? It's just going to be down again. Everybody's going to hate oil and gas. I'm just giving it as an example. This happens in all sorts of industries, right? So
there's all sorts of cycles that are industry related. Totally agree. So what makes an energy or digital infra company SPAC ready? Truly SPAC ready?
So number one, I would say you have the right team that, some of the members of the team potentially ran public companies before. So they sort of know the not only the back office, the legal, the audits, the planning piece, etc., but also have relationships with investors and research. I would say, again, a profitability or a path to profitability that's very clear. That's the second piece. I would say the third piece is, being in the industry where you see a highly predictable growth. It's not aspirational growth. It's a highly predictable growth. So whether it's, again, in energy infrastructure, it happens to be, a ton, a bunch of levers. It's obviously the AI lever. It is the, onshoring of manufacturing levers, right? It is the sort of the sovereign security, whether it's Europe, whether it's Asia, whether it's the US. All those are real, tangible, long-lasting levers of
Yes.
the companies that we're looking at.
Yeah, no, I love that. And so we were talking about mergers as well, which is kind of a specialty of yours, right? So how do sponsors ensure profitability, visibility before merger and post merger?
It's a great question. I think one of the pieces, David, and I think that sometimes sponsors tend to forget about this piece because, sort of we got into this momentum of, we're going to call a bank to show me a potential, investment or merger candidate. I'm going to merge with that candidate or invest in that company. Then I'm going to attend board meetings, every quarter. And then in 5 years, I'm going to call another bank or the same bank to sell the business. And I sort of forget about, as an investor, I think what's going to be what's incredibly important is having the hands-on approach, and especially, David,
Right.
in the sort of power or energy to AI space,
Yeah.
where this is new, right? We haven't
Right.
experienced this scale of a growth and sort of the nature of the build out energy and the power complexes build out. So
Right.
giving investors or companies that are merging with others actually having continued support of the company you merged with or with the investment that you invested in, I think is going to be absolutely critical. And the second piece that's critical is taking experience from other industries. You may have been in an industrial complex doing things that are totally different, but it is very translatable many times into
Right.
the sort of power to AI or energy to AI space. So not being afraid, sort of not hiding like, oh, I've been like an industrial guy or I've been like an oil and gas guy.
Right.
Don't be afraid of showing your skill set and applying it to sort of the new age energy build out.
Yeah, I love that. That's so good. There's so many good nuggets here that are, timeless and will, live on for the rest of the time that this lives on the internet, which hopefully will be forever. So, in terms of capital allocation strategy, because we did talk a little bit about that, and especially when structuring a SPAC and SPAC fundamentals. So, what matters most after D-SPAC?
One piece that I think is incredibly important is when you are taking a company public. This could be via a SPAC or an IPO. It applies to both instances. You have to make sure that whatever you tell investors that you will do it. Whether it's meeting, the timeline, whether it's building something on budget, whether it's selling X amount of, widgets, whether it's expanding your customer base from 10 customers to 20 customers, whatever you do, you have to make sure that you actually sort of live by your word, if you will. So I would say that is the most critical piece. The second is, again, team, right? There's a lot that goes into running a public business and making sure that you have the right people that, it doesn't have to be everybody, but having some people around the table that have sort of done it before. As much as I don't like using this, like I've done this before and therefore it should be this way. But, there's sort of just a process piece that I think is important, and having the right people that have done it before is going to be helpful.
Yeah, I love that. There's this like balance, right? Between like, this is the way we always did things and also having this innovative mindset, right? So absolutely love that. We're here with a special guest today, and I just wanted to ask you a couple more questions before we get into two final segments. The next one is, how do you actually build legacy through infrastructure investing, right? So for those people who are thinking about, I'm investing for 20 years for my grandchildren, right? How do you incorporate the legacy story into that investment?
So do you mean, David, sort of on your like personal side, investing into energy infrastructure, or do you mean kind of what we actually do, the actual infrastructure we build?
Yeah, Andrejka, that's a great question. I mean both actually. So like
Okay.
personally in terms of your own individual legacy, but also companies and corporations also have legacies of their own. For example, there's
Mhm.
a reason why you see Microsoft in the Fortune 10 for 40 years in a row, because they're building a legacy. Whether you agree with their perspectives or not, they're molding and changing. So
Mhm.
in the context of energy investments, how do you personally and kind of
Mhm.
as the spokesperson of the industry and your companies create that legacy for the entire industry to build that long-term legacy?
It's a great question, David, and it's interesting because again, obviously, energy right now is at the forefront, of any news you turn on, and right now it's oil and gas, but it's as sexy, if you will, as energy may be. You like literally, if you walk around, just I would encourage everybody spend the day today. And when you go, obviously, you go to a gas station, but you buy yourself a bag of chips. That bag is probably made out of petrochemicals. You
Right.
go to Starbucks, you have a cup of coffee that's made out of petrochemicals, most likely, or some of the components that machines that people use are made out of petrochemicals. And so
Right.
I would say, just walking around, or you go and you turn on the light, and that's probably generated from solar energy and gas or coal. And so I would just encourage people to think that how important energy and petrochemicals are as a daily way of living, right? And so, as uninteresting, because we don't have the energy is not necessarily as flashy as some of the other tech industries, but it's absolutely mission critical. And again, we are seeing it right now with the closure of the Strait of Hormuz, and the impact it's having sort of on everybody around the world. And if it does stay closed longer, it's going to have enormous impact on our daily lives.
Right.
I think it's that's how I see my legacy. It may not be as flashy as some of the exciting new widgets that are coming out, but it's a
Yeah.
mission critical piece for everything we do on a daily basis. And it can be, again, it has many facets, which is also really exciting, right? It has
Yeah.
that fossil fuel component, which we are going to be phasing out of as much as we can. So
Right.
far we have not been successful, right? Actually, when you look at oil consumption, it went from 96 million barrels a day to about 105 today in the past decade.
Right.
So as much as we
Right.
are trying, the demand is increasing, and we are here where we are. So it is the renewable component, it is the fossil fuel component, and they all sort of interact together. And if I could point to one legacy, David, that I would like to sort of leave behind,
Yeah.
is
Let's hear it, Andrejka.
sort of energy is one energy. You don't have to hate on solar. You don't have to hate on oil and gas. You don't have to hate on coal, and you don't have to hate on wind. This is one energy, and the people who can make it happen most efficiently is people from both sides. It's truly one sector. So that would be my, if I die tomorrow, I would
bring all
love
the sector
that
together.
to be a legacy. Yes.
Yeah, bring everyone together. I love it. And the sun as well. We say solar, but the sun also. I'll never forget. I had this really crazy kind of personal experience, and then I'll ask my final question before we go into rapid fire, which I'm so excited for, and of course, beyond the bag. So I flew in from London after a trip around kind of Southern Europe and the French Mediterranean. And I flew back into Las Vegas because that was the quickest flight. And it just so happened that my executive assistant had gotten into this terrible car accident up in Palm Springs area, Coachella Valley. And her grandmother, her mom, 7 flips and turns. I'm talking about everyone in the ER. I just happened to be 4 hours away. So I got a rental car through Avis, love Avis, shout out to Avis, great experience on Avis Preferred. And I drove up to Coachella. On the way there, what did I see in the desert? I saw these massive, not just solar fields, but actually mirror fields that were mirroring the sun directionally into what we would call a boiling chamber of water. And what was it doing? It was harnessing steam power from the sun. So basic. And I think back to the steam powered engine days. So I read a recent statistic, and maybe this will be time tested, but we're only harnessing 2% of the sun's power, let alone, maybe 5-10 years ago, the industry is paying energy companies to pump oil back into the ground or to hold on to these massive energy reserves. So I share that story because I love your legacy approach here. And I'll say this: how do people who are thinking about being a good steward also do that in the energy sector, meaning being a good steward of their investment and keeping stewardship as a core value or a character that they care about?
I think it all goes hand in hand, to be honest. I mean, when you look at the investments that have happened, for example, in the renewable space, David, that you just talked about. I mean, some of the biggest companies like the BPs and the Shells and the Totals, Chevrons, right? The ones that actually invested the most in the space is that sort of traditional, called fossil fuel complex, right? And those companies are probably the best sort of equipped to develop these large scales, whether it's solar project, whether it's wind project, whether it's hydrogen, whether it's carbon capture, because it's a lot of the same skill sets to extract or transport, the traditional fuel sources are simply used for renewable, power. So when you look at the statistics of how much investments have been made in, sort of renewable power, you'll actually see the players from investors to the strategics who've been in the traditional fossil fuel industries are the ones who made the most investments in the space.
Yeah, I love it. Well, this is so wonderful, Andrejka Bernatova. So great to have you here. All right, we're going to go into our rapid fire round. So me and you're going to be on stage. It's just either or, very quickly, just what comes to mind, and then we'll jump into Beyond the Bag. So, okay. Fast, rapid fire, beach or mountains?
Mountains.
Early mornings or late nights?
Early mornings.
Czech Republic pace or Houston, Texas pace?
That's tough. I gotta say the Czech Republic,
Yeah, you
Yeah,
miss
from
home.
where you are. Yeah.
Yeah, big vision or small details?
Big vision.
Gut instinct or data driven?
Gut.
Boardroom or job site?
Ooh, that's tough. I think job site is more fun.
Power plants or data centers?
Power plants.
Natural gas or renewables?
Oh, natural gas, more actionable. Decarbonize.
Speed or precision?
Speed.
Okay, IPO bell or first customer win?
First customer win.
Quiet focus or high energy rooms?
High energy.
And global travel or home routine?
Global travel.
Awesome, I love it. All right, we're going to get to Beyond the Bag after this quick segment video. Beyond the Bag, Beyond the Bag, Beyond the Bag. I'm here with Andrejka Bernatova, and today we're looking into her bag. What do you have in your bag that you want to share with everyone today? You cannot leave the house or the office without.
This is going to be very traditional and maybe not surprising. So I don't want to sort of, but here, should I show this?
Yeah, that's great.
So, this is a picture of my kids, and
I love it.
I just love carrying, my little album on my iPhone, and wherever I travel, and I feel sort of, my life is terrible. I have to travel all these distances. I open up our little iPhone pictures and scroll through them, and makes me feel much better. So my family.
Nice. I love it. You probably will be surprised by this, but you are the first person who has said like a picture of my children or like a wallet. We used to have like a little wallet, little 2x3 printout in our wallets or our purse or whatever. For me, I'm carrying this book. Actually, it's a pretty big book, but I'm reading We Who Wrestle with God by Jordan B. Peterson, international bestseller, 12 Rules for a Life and Beyond Order. So if you haven't checked this book out, I'm just getting to read it. I can't tell you whether it's good or not, but that's my Beyond the Bag. All right. Andrejka, what a pleasure chatting with you today. Thank you for bringing your industry expertise and also specifically your unique perspective on funding with respect to SPACs and going IPO, as well as your faith, ethics, and morals, really a big focus on team. And finally, of course, future tech, you're investing in the energy and AI infrastructure needed to produce for 20 years from now. I'm excited we got to start off our friendship and partnership this way. Now, what is the best way for people to stay connected with you?
LinkedIn is the best way. Andrejka Bernatova on LinkedIn, and I'm really excited. This was so fun, and I was so glad that I could share sort of the piece of the energy and infrastructure world with everybody today.
Wonderful. Well, we'll have to do it again. All right. See you guys on the next show. Play the outro. Did you know that you can go live with the power of pressing just one button? It really is that simple, especially when you have a production team like Reviting, a production partner that can help you go live, not just on LinkedIn, but on YouTube, Facebook, Instagram, Twitter/X, and of course, other platforms like Twitch, Kick, and TikTok. So I just want to encourage you to go live yourself as well if you've ever wanted to get in front of the camera, especially on live stream as you get to engage with the live audience.
I want to give a quick testimonial for the Reviting team. I was really nervous about doing lives. And so thanks to Jessie and her team, I've now been doing them for, I think, 7 or 8 months now. The other thing is they very much have helped me increase my reach and online presence. So thank you, Reviting.
Jessie, I love what you and the team do. You make it so easy for me to get in, have a meaningful conversation with some amazing guests, and then watch the post-production. But I've been picking up 50 followers a day just because that content is resonating so well. So it's working across a lot of different channels for me, and I can't thank you enough.
I'm Sarah Hanks. I'm with the Northwest Industrial Resource Center. I'm the president and CEO. One of the problems that we struggle with is getting our brand out there. And the idea of going live on LinkedIn and using that platform to its fullest extent through the way they're able to take the live event and break it down into bite-sized posts, which that can then be used to further take advantage of the platform and its capabilities. Your team shows up very organized. They're holding us accountable to the tasks that we need to complete.